Okay, recording this video. It's actually Sunday the 8th of May 2011, Sydney time. Hope you're enjoying your weekend. Got an email from Dan T. I like this email, so I'm going to try and respond to this in a video. Dan makes a couple of points after Friday's trade. So he's looking at his 1500 tip bar chart. I'll read some of this and then I'll as I'm reading it, I'll kind of show you the 1500 tip bar chart. On the better momentum, we had exhaustion buying at the top of day 10:20 Central Time, the high of 1351.75, just above the cyclical resistance, and it broke through and failed. So let me just show you that. Here's the 1500 tip bar chart. Talked about this on Friday's video. This was kind of the pop 2 points above the previous high of the day. Up here we had exhaustion buying, exactly as Dan says. We get a kind of a test back up. So he then says, while my analysis was correct about going short just after the first bearish divergence at 10:53, after the amateurs were faked out by the little uptick. This is little uptick here. You can see amateur up bars, bearish divergence, bang. So that's when Dan was saying, yep, he kind of got the message that that was a signal to go short, so that's good. Then at the low, right after that, we got a bullish divergence with two professional bars, 1346.75, and he's talking about this point here. You can see we've got bullish divergence coming in here, cyclical turning point, two blue professional bars right up there, and we get a little bit of strength from there. And then he says, it was that combination that stopped me from going short, because when I see a bullish divergence, I think market going up. Then all the way down to 1331.75 was the downtrend, and kind of, yep, that's exactly what happened. The market kind of just took off to the downside, and down here was the low. Let me just respond to that first kind of point. So Dan, you're right. Yes, that is definitely a sign of strength, kind of bullish divergence, blue professional bars. That's, you know, kind of my trifecta. But we're talking about trends here, and to start and end trends, we need to see exhaustion buying and selling volume. We'd had on these two highs up here exhaustion buying volume each time. We cracked through a little bit, and then, as you said, we tested back up to the amateurs and went down. We're in a downtrend at this point. Therefore, this downtrend's not going to stop until we start seeing exhaustion selling, and here's three kind of exhaustion selling kind of signals on the way down. So first of all, because we've seen those kind of exhaustion buying, we can't be assuming that the trend move is over or kind of reversing. What those bullish divergence patterns are showing you on the way down, and there's a whole series of them, you point that out later in the email, is their points of strength in the market. And so from there we get a little bit of a bounce. From this one here we get a little bit of a bounce. We got one kind of down here, bounce from there. So don't look on the bullish divergence signals as reversal points. You need to first of all start to see exhaustion selling or exhaustion buying activity to basically tell you which way the trend is likely to break down to. So too early to be using those as kind of signs of strength and a continuation of the uptrend, if you like. So that's the first point I'd kind of make. The second one is we had a lot of, so reading on to Dan's email here, we had a lot of bullish divergence. I can count about 7 bullish divergence and 2 exhaustion selling points. Yep, so let me just show you these. Here's the low. The high of the day was 51.75 up there. There's the low made in the 31s, I think. And we had three exhaustion selling signals and bullish divergence signals kind of on the way down. You can see some here, 1, 2, very close to the zero line, and just only a couple of bearish divergence signals. So Dan says along the way 5 bearish divergence during that downtrend. Now those bearish divergence are considered re-entry in the downtrend. Correct, that's exactly right. So these signals, these bearish divergence signals in this downtrend, as this kind of goes on, would be re-entry signals. So there's a really nice one here. Coincides with a cyclical turning point, which is a pullback and a downtrend. We get a little bit of confirmation with an amateur up bar just after that, and kind of the market kind of takes off to the downside. So my problem is psychologically it's very difficult to enter short after seeing 3, 4 or 5 or more bullish divergences with only a few bearish divergences during that downtrend. How can one be certain that the bearish downtrend will continue after seeing so many bullish divergences during the downtrend, and vice versa in an uptrend, more bearish divergence and so on? Now, so again, Dan's exactly right. You know, you will see more kind of signs of strength in a downtrend and these kind of bullish divergences than bearish divergences. You know, the opportunity, it's one of the things that I kind of look at. It's like if I'm seeing lots of kind of signs of strength, that means we're in a downtrend. And because indicators tend to be symmetrical, if you like, I mean, there would be a way, I suppose, of kind of fine-tuning an indicator and only giving you kind of bearish signals in a downtrend, bullish signals in an uptrend, and so on. But I don't want to do that. I don't want to like optimize the code, because you need to get the full picture. You need to see where we're seeing kind of signs of strength kind of coming in, and then followed by signs of weakness and so on. So first point to make is this move is not over until we've seen the whole picture develop. We need to see exhaustion selling. We need to see end of trend on the lower time frames, and we need to see professional blue bars. Now, first point, in terms of moving to this end of trend, I like to see the exhaustion selling signal here to then look at that end of trend as a likely stopping point. So if this exhaustion selling signal had come at this point here, we did a pullback and a final kind of push down, this end move would be more like this kind of bullish divergence signal here, and that for me would be a more likely point for the market to end. However, because we have got the exhaustion signal here, in those cases I'm looking for the second cyclical turn after end of trend to be a likely stopping point. Now, other kind of rule of thumb, markets they've got a window. They have to have started reversing by about 11 o'clock in the morning before you can see a kind of trend move going the other way. If the market's still moving in a particular trend move after about 11 o'clock, it's probably going to continue that way for most of the day. We actually had our reversal, and the other rule of thumb is we have no more than kind of 2 trend moves during a day. We actually got, the uptrend, if you like, the strength of the day was up to 51, and then we got, that was the reversal point at which we kind of headed down. Remember that we'd started off overnight with a 20-point kind of gap up. So this move from the close of the day before up here was really strong, and then we kind of maxed out by 11 o'clock. This was by 10:20 in the morning here at the high, and then we went into a downtrend. So you're not going to expect to continue a reversal point kind of late in the day. You've already had your 2 trends. You've had an uptrend and the downtrend, and the window of opportunity for a trend change was before 11 o'clock was the move from an uptrend into a downtrend. So we're not going to start moving up into an uptrend at that point. So taking reversal trades, even though we've got kind of end of trend, second cyclical turn after end of trend, and exhaustion selling, I wouldn't have suggested kind of going for some kind of counter trend move. Particularly, it's a Friday. We tend to get kind of ranging moves on Friday. We're getting into the afternoon here. I mean, there's never very much activity on Friday afternoons. Everybody's kind of thinking about other things, so that's not the time to be looking for a reversal trade. It's kind of looking for continuation of a downtrend. That being said, we've got these kind of rules of thumb, changes in trend before 11 o'clock on reversal days, and no more than 2 kind of trend moves during a day. The other point is to say that trend moves take a long time to reverse. You need all 3 things to come together. So this is the point about exhaustion selling. So this one doesn't count at this end of trend. We'd have to wait for at least the second cyclical turn. If you're looking around here at end of trend, the last kind of blue professional bars that we saw were just here. There was just one little weak one here, and another very weak one here at this point of this exhaustion selling. But that's what an end of trend looks like. You can see a whole series. We kind of punch to new lows. The professionals are saying this is a gift. I'm stepping in here. Bang. Big volume. I've got a flush volume signal followed by exhaustion selling. We've really exhausted kind of the downside move here, and that's when we can start to say, well, a bottom is starting to be formed. Not to take a reversal trade because it's too late in the day, but to start saying a bottom has been formed. Now, let me just go up to the 4,500 tip bar chart and show you exactly the same thing. So this is the high up at 51, blue professional bars up here. We broke into this downtrend on this whole move. So we can start to say, yes, there's a move to a downtrend because we've got a couple of things in place. We've definitely got professional activity kind of at the highs here. The lows of those professional bars get broken and we kind of move into a downtrend. And this whole move down, we see lots of amateur bars, amateur yellow bars. The first time we see blue professional bars kind of come into this downtrend move and stop it is right down at the lows here. When we get exhaustion selling at this point, blue professional bars kind of come in, and that's when we can say that's actually a professional exit on the 4,500 tip bar chart, where we get kind of exhaustion selling, blue professional bars. That's the time to be kind of taking profits on this time frame. Now, so that's kind of my view on the 3 kind of components performance, we're using 3 different indicators. They're kind of non-correlated, measuring 3 things: price, volume, and average trade size. And you need all 3 to kind of come together for changes in trend to take place. So we need to see, oops, let me go back to 1500. We need to see kind of end of trend signals. We need to see exhaustion selling and blue professional bars. And when we have had all of those 3 kind of take place, then we can see an end of trend happening. So this one doesn't count because of exhaustion selling happens on it. So I'm waiting for the second cyclical turn. And then at this point here, yes, we have exhaustion selling, but haven't seen the blue professional bars or a whole bunch of them. And then yeah, we see that kind of later in the day. So that would be my kind of advice on changes in trend. Now, you're also mentioning, Dan's also mentioning in his email kind of good points to re-enter. And again, re-entry is quite difficult. I find it quite difficult. I find it far easier to try and anticipate a trend change and sit through the kind of the volatility as the move kind of gets going and then get out on a profit target. For me, kind of re-entering I find really difficult. But couple of, what you're looking for is these kind of reversal signals using the same 3 indicators that we're talking about. So cyclical turning points, we're always going to get those kind of when we get significant kind of pullbacks. The first one here is a pullback level, bang. So that's a good one to take. This one's a higher probability one as well because, again, as I said, the exhaustion selling happened on end of trend, so we're waiting for second cyclical turn on end of trend. So this one would have been a higher probability kind of trade. Sometimes these are quite shallow and we only kind of move down to kind of the previous lows. Sometimes you get a bit lucky and you get a little bit one that travels quite a long way. So looking for pullbacks using the cyclical turning points. Bearish divergence, now as you said, looking for bearish divergence signals kind of in the downtrend. So this is where the move kind of gets going. This one here, when it coincides with the cyclical turn, that's great. Another one here coincides with the cyclical turn. Even if you'd taken this one here, which was kind of really not within the cycle, I mean, if you're using a 4-point stop, that's, you've got safety there in terms of your 4-point stop. It could have been a poor entry at that point, but at least it did kind of go in your favor because you're trading in the direction of trend kind of ultimately. So then and any kind of amateur or blue professional bars kind of at the highs. And let me just kind of push this out a little bit so you can see some of this. So amateur bar kind of at the highs up here with a no demand pattern up there. This one here is an amateur up bar. As soon as the low of that bar gets taken out, that's kind of a high probability kind of trade and so on. Up at this point here, it's too late in the day, I would say, to be getting kind of short at this point here. But again, it's the same kind of thing. Blue professional bars at the highs, the low of that bar gets taken out at a cyclical turn, bang, the market goes the other way. Of course, the other thing you can do is go down to the 500 tip bar chart and you'll find far more cyclical turns that kind of work out well. So this is the high up here at 51 where we're exhaustion buying. This is a little push back up where we had Rambo patterns, amateur up bars, bearish divergence, and the market takes off to the downside. So this is where Dan was seeing his blue professional bars and bullish divergence kind of coming in. But this little tick up, amateurs leading that move, got taken out to the downside. And even though you're seeing these blue professional bars here, they could easily be kind of falling through the ice. As soon as the lows of those blue professional bars kind of get taken out, that's a sign that the market's kind of weak and it's going to fall off. So more kind of cyclical turning points. Here's another one, re-entry short, another one here. This one a little bit early here, but then we get a little Rambo pattern. Amateurs kind of poking through here, bang, fall off. Another one here with amateur up bar at this point. And then here, moving into this kind of move, a whole series of Rambo patterns up here. Market's a little bit confused whether it's kind of broken into an uptrend or not. But as soon as we get bearish divergence and a blue professional up bar, the highs of those moves kind of being taken out, the lows of those bars being taken out, bang, we kind of move into a nice kind of strong trending move kind of down here. So using any of those kind of 3 indicators, the reversal type signals to get in is kind of safe. As long as you're trading in the direction of trend and you've not seen kind of exhaustion signals to signal the trend move is over, then you fairly should be fairly safe that you're kind of going to get out with a fair profit, a profit target. And the other thing on the other way to look at this is maybe looking at pullbacks to previous support areas that become resistant. So on the 4,500 tip bar chart, this cyclical support did not hold because although we'd had bullish divergence at this point, we'd not seen any blue professional bars kind of coming in here or exhaustion selling at this point. So this one, when it failed, we're moving into a downtrend on this time frame. So move back up to test support becomes resistance at this point. Amateurs kind of active at the highs there. As soon as the low of that amateur bar gets taken out, the move kind of continued on the downside. Some of those, so that will happen on a higher time frame. You could have also seen that on a lower time frame here. This is a test back up. Support becomes resistance right at this point here. We move to the downside. We test back up again, and we go to the downside. And this little pullback in a downtrend is almost a similar thing, kind of testing this. Support becomes resistance level. The market kind of falls off. So there we go. That's kind of some commentary on that down move. Dan finishes the email saying, thanks again for all your help and videos. Really enjoy watching the live trades. Every day you make a new video. Still have my sights set on being consistently successful, but so far made lots of bad trades and wrong decisions. I'd like to change that. Yep. Hope to hear from you when you get a chance. Have a great weekend. Your friend Dan. So Dan, hopefully that video is kind of helpful to you. It's hopeful to everybody else. And frankly, this is what I do every day, and I think everybody should be doing every day, is kind of reviewing their charts. Whatever indicators you use, kind of reviewing your charts and trying to reinforce these messages. I mean, I'd stopped trading at this point here, gone to bed, but when I wake up in the morning and kind of check my charts, it's a question of spending some time understanding exactly, seeing what signals kind of went off, how the market worked. And the beauty of using a standard set of indicators, you see these patterns. Although every day is different in the market, you see these patterns repeat on a consistent basis, kind of time after time. So by reviewing your charts each day, when you see the patterns kind of reappear on subsequent days, like, you'll be able to take advantage of them. It takes time, takes effort to do, but if it's a job, if this is what how you want to make your living, then this is part of the homework that needs to be done. It's part of the the day's work. So hope you're enjoying your weekend. I might look at my commitment of traders charts. If there's something I want to talk about, I might kind of add that to this video. So anyway, I hope you're enjoying your weekend.